Eli Lilly is another pharmaceutical company that has been dropping price all throughout the year. As you can see, year to date, it is down 10%, about $82. If we take a look at the 1 year chart, it is down 26%, about $256. So this is making me wonder if this is a great investing opportunity, not only for growth in terms of the share price, but also for their dividend. In this video, we're going to be taking a look at the intrinsic value of the stock. We're going to determine if it would be a good investment, my own personal opinion, and we're going to see how good the dividend is to see if it's even worth investing in the stock strictly just for the dividend. Now, here you can see a little chart. I asked ChatGPT what was the main reasons for Eli and Lilly to be dropping in 2025. Well, the first factor is going to be their result for their weight loss drug, the same thing that's happening to Novo Nordisk. It wasn't as expected. And when it comes to this type of companies, their value is not only determined by the numbers and the financials and obviously their Q1, Q2, Q3 results, but also what they have in their pipeline. Usually when pharmaceuticals have a lot of projects or they're working and getting results on some new pill or drug and they have a pipeline that they're working on, usually the stock tends to do good. When they don't have that or when they're failing in results, that's when share prices start dropping. So another reason was high valuation and strong Q2 results. They couldn't compensate for investors, so they were worried. They're worried about that. And then also there's a lot of political issues. The industry overall is just not very good at the moment. The whole healthcare and pharmaceutical industry is going down, so this stock is going down along with it. But as we saw a few days ago, Warren Buffett bought in United Health, so that gives you an idea that maybe these companies are still great companies. They're just going through a bad time right now. And if you know anything about Warren Buffett, he always says be greedy when others are fearful. Now, however, this stock is still considered to be overvalued on a 5-year chart. As you can see here, what this is considered to be the intrinsic value to compare what the stock price is now. Is currently about 44% overvalued, but we're going to take a look at Stephen Graham's intrinsic value. However, if we take a look at this chart, and if you've been following the channel for some time, you can see here that the stock price has been falling, but the EPS have been going up. So the company is making more sales, yet the stock price is going down. This to me is usually a good indication that the downside of the stock right now is not really because the company is doing bad. It just might be the overall market sentiment. Now, if we take a look at the overall financials of the company, we can see that revenue is up 32%, operating income is up, net income is up, free cash flow however is taking a hit. This is because strategic spending, they have increased their capex and they've also made large investments to try and keep up with the high demand for GLP-1 drugs. They also have more acquisitions, and as we're going to take a look now, they have a shareholder buyback program, which is very good. When people start buying back some of their own shares, usually tends to tell you that the stock is undervalued, kind of a good sign to start investing in the stock. However, this is just my own personal opinion. And as you can see here, they're investing about $27 billion to build 4 new US manufacturing sites, and of course that takes a lot of capital, hence why the free cash flow is dropping. So it's not like they're just losing cash flow, they're actually reinvesting in the company. As always, comparing the assets to the liabilities, they have $100 billion in assets and only $82 billion in liabilities. And if we take a look at the rest of the company numbers, obviously again the free cash flow margin is dropping, but everything else is pretty much in the green, and they have a great gross margin of 82%. Now, this is not the intrinsic value of the stock, but you can see the low forecast for it to be worth is 681, base is 910, and then the highest forecast is $1,249. Now here we get to the good part. Okay, they have a 0.83% dividend yield, which pays you a 5.8 dividend per share, and we're going to take a look at how good that dividend actually is in a second. And as we saw, they have a buyback program which is about 0.38%. As you can see here, they've been buying back their shares, which is very good. They give you more value per share that you own of this company. And then before we take a look at the intrinsic value, let's go ahead and see the dividend. They have a dividend growth of 10 years with a 15.15% 5-year growth rate, which is great, and they have only a 34.67 payout ratio. Again, as we saw, the dividend yield is currently at 0.86, which gives you an annual payout of $6. Now, if we do the Benjamin Graham calculation for the intrinsic value, we put the ticker symbol and the growth rate projection, which is going to be 21.2, and as you can see, this stock intrinsic value in the original formula, it's about 779. In the updated is 692, which we're currently below that, and then in the analyst revised, this stock would only be worth 383. However, I barely ever use this formula. The downside to this is I do tend to buy stocks at a margin of safety, usually with 35%, which seems to be a bit high, but it does work. Like for example, in a company of United Health, I was able to do this, and my acceptable buy price for this company will be around $450. The stock is currently at 697. Again, as I've said in many videos, I don't think the stock will reach these levels. However, if the stock does drop below the 600 mark, I think I'm going to start opening a small position and see how we go from there. If you enjoyed the video, please consider leaving a like and subscribing. Let me know in the comments below what you think of this stock. And as always, I'll see you guys in the next video.